Ignition. We have liftoff.
Amazon stock, year to date, 2%. Woohoo! Winning. This stock is just stagnant, not going anywhere. It hurts as a shareholder. It hurts bad. This is not Magnificent Seven behavior. Andy Jassy, CEO, where are you? I haven't seen you in months. I'm seeing all the big mega cap CEOs. They're on CNBC. They're on Bloomberg. They're being interviewed. Our CEO, do you have any influence? Nobody's turning to you when they have questions. Nobody's turning to you when there's market volatility. There's no invites to the White House. Maybe you need to put on a leather jacket. I don't know. The last time I saw you was with this guy. We can't have you meeting with Mad Money Jim Cramer. That's why the stock has been down. Bad move. Inverse Cramer, come on, inverse. People have forgotten about us and all the companies we own. And it's growing. Every year it grows. We have entertainment. We have Twitch, the Prime, the advertising. We're in the grocery business. We're in the pharmacy, healthcare business. Ring, Fire, Alexa, AWS, Amazon Robotics. The list grows every single year. The big boys are coming out to play last week of October. October 30th, Thursday, Amazon. Amazon isn't just an e-commerce giant anymore. We're a technology powerhouse. AWS drives most of the profits while retail and advertising continue to scale. Yet the stock trades as if growth is stagnating, but it's not. AWS revenue grew 17.5% year over year, hitting record levels. The rise of AI and cloud infrastructure continues to push AWS forward. It's the backbone of the digital economy. But despite this growth, Amazon trades at 40% below its fair value based on DCF and peer multiples. The market still prices Amazon like a retail company, not as a diversified tech and infrastructure leader that it truly is. Now, I know there are concerns about Azure, Google Cloud, gaining momentum, taking share from Amazon and AWS. And I think that's the biggest concern for shareholders and investors. And so we got to see what happens on earnings coming up. Let's see if we can have a turnaround here. We have to continue to lead. We have to continue to grow. We have to try to take market share. We have to fend off the competitors. Now, unfortunately, earlier this week, AWS went down. And so if you try to get on some of these websites, well, you were out of luck. A lot of people forget about how big of a player Amazon is in the cloud business until outages happen. And the strange thing is, the stock was up, I think, 1% that day. People understood this is a serious player. And guess what, guys? The engineers were working tirelessly to get the servers back up and running. Great job, boys. We'll be up and running in no time. Don't worry, customers. We got your back. Now, Amazon and Andy Jassy have made it clear. Amazon's robots will run 75% of the U.S. operations by 2033, replacing 600,000 workers. A lot of warehouse workers. They're going to lose their jobs. The company's going to make billions. It says here, leaked documents reveal Amazon's automation strategy to cut jobs and save $12 billion. Oh, we're not the only one, though. We're not the only ones. Here's a list of humanoid robots. There's Tesla, Optimus. And you might have heard of Boston Dynamics, Atlas. Well, Amazon robots don't look as impressive as the other ones, but whatever it takes to get the job done, whatever we need to do to become more efficient, more profitable, save money, we have to scale. All right, in yellow, we're seeing Amazon revenue. In the white, we're seeing Amazon operating cash flow. These are Amazon's strengths: strong balance sheet, cash flow, continuous reinvestment in AI, logistics, and cloud, a founder-led culture of innovation, massive economic moat in logistics and infrastructure. Amazon is a real compounder. With AWS and advertising leading growth, Amazon's next decade could outperform expectations. Amazon is a high-quality business with a strong moat, and it just appears mispriced to me. It appears mispriced. The company is deploying excess cash back into the business to invest in big ideas such as building out AWS, launching generative AI tools, expanding Amazon Prime delivery capabilities, and more. Now, Amazon takes a lot of risks, which have paid off and led to phenomenal long-term gains for patient investors. My only concern is Amazon's stock-based compensation regularly exceeds its buybacks. Amazon hasn't repurchased stock in years, and it doesn't pay a dividend. Meanwhile, its stock-based compensation is over $20 billion for the trailing 12 months, and its outstanding share count continues to climb as Amazon dilutes existing shareholders. That's my biggest worry. I love what Amazon is doing with automation. These used to be pulled around by humans. The carts used to have one human pushing a cart around, no longer. Warehouse workers, manual labor, picking up box after box after box. That is changing. The robots are here. Now, this looks slow to me. I've seen humans work in a warehouse, and they can work a lot faster than this, but they're just getting started. Humans no longer needed. Now, this technology here is a game changer. It can sort a lot faster than humans on this belt. I've seen it in action. It's pretty impressive. A lot of volume, real quick. And unfortunately, Jeff Bezos, he keeps selling stock. Now he owns less than 10% of the company. His ex-wife is selling off too. We'll miss you, Jeffrey. Give my best to Lauren. All right, let me leave you here with the new Amazon delivery glasses for drivers.
So today, I'm really excited to introduce you to Amazon Delivery Glasses, a wearable companion we've designed specifically for delivery associates. The smart glasses use computer vision and AI technology built by our team to display real-time navigation and delivery instructions directly into drivers' field of vision. With this technology, drivers can confirm the right package they need to deliver before leaving their van and seamlessly capture proof of delivery photos at customer doorsteps. The glasses provide turn-by-turn navigation, guiding drivers to the exact delivery location without then having to repeatedly check a separate device. They also include hazard detection capabilities that act as an extra set of eyes for safety, detecting hazards like a dog in the yard and sharing that information with future drivers.